What's up guys, this is Sean and welcome back to the iherng podcast. And let's head on to the question for today. This is from Vincent. Hi iherng. Hope you're having a great day. This is Vincent from JB. I really appreciate you taking the time to read my email and value your advice. I'm 31. Currently working in Singapore where I also run my business. I bought my first property in 2020, a semi-D in Taman Sutra Utama for personal use, followed by a condo at KSL City Mall and another property Suasana Iskandar JB, close to the RTS in late 2023 as an investment. The rental income from these almost covers my mortgage payments except for the management fees. Right now, I'm in the process of acquiring my fourth property in the Perling area for my own use. Here's when I need some advice. My goal is to build enough passive income / wealth to support my family's expenses. My income is sufficient to buy more properties, but I'm torn between purchasing additional properties to rent out or focusing on paying off the mortgages for the 4 properties I currently own. I anticipate that the Malaysian ringgit might weaken over the next 5 to 10 years. Initially, my plan was to concentrate on these 4 properties, but now I'm considering buying more if the currency continues to weaken, making future investments potentially cheaper. I'm also thinking about investing in properties in KL, Penang or Bangkok. But that seems challenging since I'm not very familiar with these areas and don't reside there. Another consideration is the cost of buying property. For example, buying a 2 million condo in Singapore would require at least 600,000 Sing dollar in cash upfront. In Malaysia, the same amount could get me about 3 properties, and in Bangkok, 3 to 4 studio condos. Ultimately, I plan to retire in Malaysia. As a Malaysian, I feel they are more advantageous to investing here compared to a foreigner who might face losses due to currency exchange after selling the property. What do you think? Should I keep expanding my portfolio or would it be wiser to focus on clearing my existing loans? Thanks for your help. Best Vincent. Wow, first of all, thank you very much for writing in. And I think you're doing great. Like, you're 31 working in Singapore. I think that's why you can buy so many at such a young age, because of the currency exchange. Like now, I don't know what is the currency exchange right now. Let's just check. Malaysian ringgit to SGD. Wow, today is 3.49. Goodness. And that's the main reason why it's a struggle to actually get talent within JB itself, because every local Johorians that resides around the coastal area, right, would definitely convert in their mind. Just across is 3.5 coming back. Wow. Anyway, I'm glad that Vincent channeled all his earnings into property. 1 semi-D house in Sutra Utama, 1 condo in KSL, 1 Suasana close to RTS, and all almost cover all mortgages. So it means KSL, City Mall and Suasana Iskandar JB, right, both can cover the mortgage payments already. And I might say those are great investments, because for those who have bought at least during the peak of Iskandar, right, all got their hands burnt, honestly. And only recently, with the announcement of RTS and the price hike of real estate and rent in Singapore, right, pushing everybody over to JB, only now you can see the prices and going crazy. And the last I checked, property around RTS is selling for around 2,001 to 2,300 per square feet. And my last talk in Batu Kawan, we were discussing about how properties in Tanjung Tokong reclamation area is also selling for 1,001 to 1,002 per square feet. And now I'm actually in the office in Mont Kiara itself, and our average price is 900. Think about it, right? So Johor, we all know how much is the population, but price per square feet 1,001. If you think about Penang, Tanjung Tokong area, reclaim area, 1,001. Mont Kiara 900, and we call it expensive. Perspectives, right? So ultimately, there's no right, no wrong, but so far so good. And now he's actually in the process of acquiring the 4th. So the question here is, should he buy more so he can rent out versus clearing the existing properties that he's owning right now? That's question number 1. Question number 2, besides JB, what about KL, what about Penang, what about Bangkok? Because all different locations will have different dynamics, and that's the question. So first of all, right, something that we need to first discuss is everyone, right? I'm certain almost everyone are very confident about inflation and confident about the weakening ringgit. Against Singapore dollar, of course it will weaken, right? Because Singapore dollar is one of the only currency in the world that weakens the least compared to the other currency like USD and yen and whatever lah. And what inflation means? Inflation means our currency will just carry less value. Last time one house we use 500,000 can buy. 30 years later we use 1.5 million also cannot get. Okay, so the money, even if we were to keep in the bank, let's say for the same 500,000 we keep in the bank for the next 30 years, the price of things are going up significantly. It also means the future value of money is going down. But if you want to be very technical about it, actually it depends on what you're buying also. If you're looking at technology things, like for example last time Nokia, if you were to buy Nokia 10-20 years ago, it was a very expensive gadget, like 1,000 plus 2,000 for a handphone. But if you were to keep all those handphones and hold it for 20 years now, it's worth nothing, not even scrap. But if you were to hold the right things, for example, real estate or stocks of the right company or Bitcoin or whatsoever, right? 10-20 years later, it has appreciated so much against money. To be technically correct, fiat money. So in this context that applies to Vincent, right? The main difference here will be your earning ability in Sing dollar. So that sets you apart from the rest of the audience that's listening to this, right? And the strategy I share most of the time to our friends in Singapore, or they work in Singapore, or they earn in Sing dollar, right, has always been to retain as much currency in Sing dollar as possible and to use credibility to acquire properties. That's the first thing. Because if I were to make a stand, Sing dollar or Malaysian ringgit to be strengthened for the next 25 years, close eye, I will pick Sing dollar, right? Of course, I will pick the other side. In other words, you are right. A 500,000 loan of today is going to worth less in value for the next 30 years. Like now, every month, 2,000 monthly installment, right? It feels something today, but for the next 20-30 years, right, this 2,000 is going to feel nothing. And if you are within that school of thought, then I think getting a new property to rent out will be a better stand. So that's the first school of thought, right? The second school of thought is then your confidence in money making. Because I speak to so many people throughout all the meet and greets and events and things like that, there are generally people like me who is going to work until I die. I will definitely work until I die. There's also another school of thought where they want to retire by 35. I don't know why, but I don't judge also lah. So if you want to retire by 35, it's fine. And in order to retire by 35 is to clear off all debts. So this is a stand that you need to make yourself. Like, are you going to work all the way and you are confident in your business and your money making ability? Then you can go aggressive in your acquisition for properties. If you are just like, hey, you know what? I'm going to work for the next 3 to 5 years, then I'm done, right? I'm going to just clear off all my properties. Then my cash flow is going to be positive. I'm going to just leave off those rents for the next 10-20 years. Then I'll say goodbye to world. That can also be a strategy. This then is a personal choice. The third thing will be in terms of income declaration. So in Malaysia, I don't know which system do you declare your tax in, but in Malaysia, when we declare income tax for rent, we can actually deduct off the interest portion of the loan, and that is usually around 88 for the first 3 years. From year 4 to year 12, it's about 85% of the total installment amount. What I mean is, let's say if your monthly installment is 3,000 and the rent that you collect is 3,000, so technically you break even, right? So when you declare tax, it's going to be 3,000 a month times 12, which is 36,000. Then you can minus off 85% actually. So let's do the math. 36,000 times 85%. So 30,600 is actually tax deductible. And these are the interest portion of the loan itself, which also means that the real principal that we get throughout the year is only about 5,400 a year lah. But better than nothing, right? So here is when we build the equity within the property itself. So out of 36,000 that the tenants pay on behalf, after clearing all the interest, we are building 5,400 a year. Then we also can deduct repairs, we can deduct agent fees, and then etc. In other words, if I were to fully clear off my debt, which is to fully settle the property, there won't be any deductible because there's no interest occurred. Indirectly means 36,000, I will need to declare all of it. And it's going to be way hefty compared to just declaring 3,000-4,000 versus 36,000 in total. So this got me thinking after declaring my income tax for all my portfolios. It's a hefty one, but luckily I have high debt, I'm paying a lot of interest to the bank, therefore it's actually tax deductible. So it's actually way more friendly. So I'm just using more debt to get ownership of properties. Eventually in 30 years time, those will be mine. And the more I declare the rental as income, I can pay 3,000-4,000 for a tree. So I'll pay around 10,000 of the annual rent as income tax. Then I will use that to be calculated within my DSR, and I will continue acquiring more versus just settling the debt. So this also then goes back to the investment philosophy that we all have for properties. Some will always think that you all don't pay any down payment when your installment amount is going to be so high, you're paying so much interest to the bank. Eventually when you sell, right, you get nothing because all are interest. You pay everything to the interest. Might as well I just put 30%, 40% upfront, and I take 10 years, 15 years loan tenure. I will save up a lot of interest. That's where I will make money if you flip. So that school of thought is actually good if you are cash rich. If you're a poor investor like me, we got no cash when we hold no cash at all, then the only way is to depend on financing. And the philosophy has always been to own a property with the least amount of my own money possible. I will use as much money from the bank as possible. I will use tenants' time to pay up the loan. I will use other people's knowledge to learn from them and to roll my wealth. That's the leverage game. Eventually this will differ in accordance to the money that we have. If you have a lot of cash, for example 10 million sitting in the bank, nothing to do, and it's just sitting in the form of cash, then I think it's dangerous. So maybe you can just cash buy the property, no issue. But for me, I will do the other way because I don't have 10 million in my bank. The next point then will be something that is also very, very personal. This is based on my very own experience, right? Can you sleep knowing that you owe the bank a lot of money? Can you sleep peacefully knowing that you have a huge debt waiting for you to be cleared for the next 30 to 35 years? For me, I am perfectly comfortable because I will know that there are tenants that will help me pay. Even if the tenants leave, I have enough savings to kind of hold the property for at least 6 months. And 6 months based on the property furnishing level, I think it's a good enough risk tolerance lah. So for every property, then I will somewhat hold 6 months, 6 months, 6 months, 6 months. Because the worst thing for me as an investor is if all properties, right? All properties, all got no tenant for the next 6 months. So that's my risk. However, for my wife, because I bought property for her, when she log into the account, she looking at the loan amount. Sometimes she feels uncomfortable knowing that she owes the bank a lot of money. That happens to a few relatives of mine as well. They are just uneasy knowing that they owe the bank a lot of money. So that is something very personal. And based on your email, I don't think so like this is going to happen to you, but this is just going to be helpful for audiences who are listening to this at home. And last of all, I think the last point to consider, right, will be the next property. So this strategy of rolling, right, like we keep leveraging on property A, B, C, D, E, F, G, H, I, J, K, right? We keep leveraging or using rental to cover installment, minimum, every month, maybe cough out just maintenance. Also, we are fine, right? Because we know that 200-300 a month to keep ownership, right, by capital appreciation are already earned back. So that's the school of thought, but we can tahan until one bad one. We just merely need one bad one, and that will somewhat create a domino effect on our existing portfolio. So this is something very crucial. And you highlighted correctly, like if you are not familiar with KL, or you're not familiar with JB, or you're not familiar with Penang or Bangkok, right? I don't know why Bangkok, but that's my advice. Like if you are not sure and if you're not certain, because every location will have their very own dynamics. Therefore, the best location to invest in for property is the location that you're most familiar with. That applies to investment assets as well. Like, why do I like real estate? Why don't I play more stocks, or why don't I play US stocks or whatsoever? You play whatever that you're most familiar with. That's the safest investment for you. For me, I studied this since young. I had a professional degree, professional master certification on this subject alone. That's why real estate is like life to me. So it makes a lot of sense and I'm perfectly comfortable within this asset class. Doesn't mean it's the best, it's just the best for me. And this is also speaking from experience. I just had one terrible investment right? If you have followed me enough, you will know the story. And it's coincidentally also in JB. I invested in a property that I cannot afford because I was too confident in my previous investment prior to that. I thought, whatever lah, sure make money one, and it didn't. So that ruined the whole investment portfolio. I was in a slump for a very long time, 3 to 4 years time. And that taught me a lesson to not overgear beyond what we can. And let's be very, very honest with this. Yes, we will know that, oh, now business, this year I make a lot of money. Let's have a safety buffer, right? So we know we can chong, right? We are very confident in our own, but market is not always like that. There will be ups and downs, ups and downs. As long as we have the savings to carry us through the downs until the next high, then it will be fine. For example, let's say if you were to invest in a project that is under con right now, halfway the developer just declare bankrupt. They just wind up, the property is abandoned there, and you are left with the installment amount that you need to pay every month, not knowing when the project will be completed. Now every month you will need to bleed at least 2,000 to 3,000 there. Can you still carry through all this? So that's a safety factor for my investment approach all this while. Before I want to sign the papers, let's say the installment is 2,005. A question that I will ask myself is, 2,005 for the next 6 months if empty, can I afford it? If I can, let's go. That's the worst case scenario. Well, that's the second worst case. The worst case is the project actually incomplete. The developer actually abandoned the project. So that's the worst. The second worst is this. So that depends on the reputation of the property developer as well. And after going through all these points, for example, like, okay, because you know you're confident with your Sing dollar earning ability, okay, let's go. If you understand the risk versus return, you know how to play the game. Leverage is the way to go. Use credit to own properties in Malaysia. Keep currency in Sing dollar. Let's go. If you can sleep peacefully, let's go. You got enough insurance to cover all the loans, right? You do not burden your family. Let's go. And you are with the mindset of leveraging with accountability, leveraging responsibly, then let's go, right? There's also a way where it's in between. It need not be to go all the way, because it's going to be a conversation of timing also. Like, let's say if I were to have 300,000 to 400,000 earnings last year from the business I declare out as dividend to directors, right? So I know this amount of cash. Do I settle my home or do I buy more properties? Technically, I can do both, of course, with that amount. But I can choose to first settle the home, right? The home that I reside in, let us settle that first. So in case anything happen, business wind up, bad timing, policy change or whatsoever, the home is all good. That's one way to think about it also. Another way to think about it is you actually save interest. Because if you know how to calculate all this, right, it's based on the outstanding amount we owe the bank and it's calculated daily. That's how interest is calculated. So I can just put in the money into the housing loan first and treat it like a business overdraft, like an overdraft facility. I'll just put in whatever to have saving first. And to think about it, housing loan is about 4%. I don't know what is your rate, but averagely it's around 4% right now. Without even taking any risk, here I'm already saving 4%, and I think that's a good thing. This applies then to Malaysian ringgit earners lah. So if my Malaysian ringgit, do I buy more and risk it? Then maybe I get 4% a year, or for sure I just put into my housing loan, knock off interest, I get 4% savings on interest already. Okay, but in your case, Sing dollar versus Malaysian ringgit, I don't know what's your take then. Because to keep at Sing dollar, put into the REITs there or whatsoever, makes more stable, more appreciation in terms of forex, in terms of interest compared to savings here. But the conversation here then is not really about math, it's about peace of mind. So my suggestion, weirdly, instead of gearing more, right, because it's a home that I will stay, and the sentence that actually changed everything will be your goal. It's to support your family expenses. And the main expenses for all family is always lodging. That's why during MCO, during the lockdown, right, when a country declares moratorium, means that all and everyone, we don't have to pay car loan and housing loan. Suddenly liquidity within the market just increased. Everybody got money. Why? technically their average expenses on lodging is around 30 to 35% of their earnings. So let's say if they were to earn 10,000, it's about 3 to 4,000. If they were to earn 5,000, it's usually around 1,500 to 1,800. Suddenly you don't have to pay this amount, right? Wow, the entire expenses belt all feel very loose already. That's why you can see a lot of things actually just surge upwards after that. Applying back to your story, Vincent, that is something that I will settle first. If I were to settle the house in Sutra, so no more money installment for the family, and you will feel very free. And because the rest of them is actually covered by tenants, so no need to worry. And the thing is, you can do both. Because you actually you're in the process of acquiring a 4th property in Perling for your own use also. So I don't know, is it an upgrade? So that's the weird part. But based on the goal to reduce the monthly installment for the family as soon as possible. In my case as well, the house that I bought for my wife, I'm actually settling the debt actively right now. Although I will leverage on all the tenants and the rents to cover all my installment, and I use this to build equity again, I am actively using my income and savings to settle that house first as a home. Eventually, if that really becomes a home, then very good, right? When we move in, then no need to pay housing installment, and I don't have to actually declare in the income tax that I'm collecting rent for it anyway. So the housing loan interest I can save. In terms of income tax, it doesn't really matter, and in terms of peace of mind for my family, just stay at most you just pay maintenance fee every month. Sweet. But if there is really any emergency, right, I can always just fill up a form and I withdraw out the money out and to cover everything else. And I think that's all for my suggestion. This also falls back to Rich Dad Poor Dad's book by Robert Kiyosaki, right? Like, what is the definition of an asset? By accounting terms, car is an asset or whatever that is an asset, right? But by the book, asset is categorized with its ability to pay us money or put money into our pocket. If you were to buy a car, is it an asset? No. If you were to drive it as a Grab or you rent to somebody and it generates profit for you, then it's an asset. The same with property. Actually, a house that we stay on our own is part of our expenses. It's not actually asset because every month we need to cough out money to pay for it. That's why it makes a lot of sense if you're a very ambitious investor where I will rent out all the property I own to collect rent while I rent in a different location that is cheaper. Because ultimately, a property is part of our expenses in life. Following that logic also, even if you fully pay for it, right, there will be the repair of gate replace the tangki paint change toilet bowl here crack what. So it always constantly takes out money until the day we rent it out. So here then, to reduce the expenses is by settling the home first. But the only tricky part here for you is saving the money in Sing dollar versus paying off the debt in ringgit. So the only variance here that I have no access to will be the total amount. Let's say the Perling house, if it's like 600,000 to 800,000 and it's left half, right, then maybe settle that first. The next tricky part is you are going to buy the 4th. So let's say if you were to settle this one, does it mean you're not going to move, or you're going to move then you settle, or you move then you sell off this one, or you want to hold this? And this 4th, is it a landed or is it a high rise? That also I don't know, but I assume it's a landed. Johorians all will only stay landed one. So again, if I'm in your shoes at 31 and me being very ambitious, me being very confident in my own income generating ability, I will gear up for more. But the only difference here is I will not gear up for my own home. I will not buy a home so soon because it's only your 4th, right? I will buy maybe after like 10. That's when I will really consider hunting for a proper home for the family. Again, that's me. This does not apply to everyone, right? Everybody will have different risk appetite and tolerance. Let's make assumption if it's a landed property for your 4th. These 2 that is rental generating, let's just hold the first house that you move off to, right? It depends on how much is outstanding and what you're going to do with it. Most likely you're going to rent it out also, right? So can the rent actually cover the installment for your first house after moving out? Maybe if you have really extra cash, don't know what to do, and you don't want to buy so many properties because it will expose you to more risk, maybe settle the first house first. And for landed, it makes more sense because here then landed is more of flipping and you make the capital appreciation, right? By paying up more, by loading it more, right? It reduces the interest that you need to pay to the bank. Therefore, when you flip later, you will see more meat. You will see more earnings. But for high rises, the game has always been cash flow. So if you have really too much money, don't know what to do, load up the house after you move to an amount where the rental can cover the installment. I will pay up until the amount where my monthly installment is the same with the rental market. So every month I will just break even, leave it there. Why don't just settle it all? Because I got better things to do with my cash, man. But at least every month I don't bleed. So that's the school of thought. So if I want to sell later also, it can be liquidated, right? I can also anytime just refinance, or it depends on the loan format. If it's a flexi loan, I can anytime just go in and take out money if I need to roll for my business. Anytime, man. So that's the school of thought. Very fluffy, this episode, very fluffy because I don't have the exact amount. I think Vincent, looking at what your achievement, I think you are smart enough and you know exactly what I'm saying. Ultimately, it's a personal journey. And remember, for everybody who's listening also, property investment is a personal journey. Don't think that people is gearing up to 7 already, I got only 1, I'm such a loser. No such thing, right? Everybody's earning ability is different, everybody's confidence is different, risk tolerance is different. So play in accordance to our own and be accountable for our own action. And I guess that's all for today. Thank you very much, Vincent, for sending in the email. I really do appreciate it. I'm really looking forward to my Johor trip soon. So to look at the hoo-ha right now. Everything is so hot right now in Johor. But anyway, that's all for today. Thank you very much for watching. For those who still have any questions regarding real estate, do just email me at taniherng@gmail.com, or you can just DM me on Instagram, iherng. I'll try to reply as many as possible, and I will see you guys on the next one. Ciao.